Bam! Right on the nose. Right on the nose. Friday, 9 o'clock. Welcome to the Independent Investor Channel. All the loyal subscribers, I'm in debt to you. Welcome to the channel. My name is Ryan. I'm the only one that does YouTube that's not a YouTuber. So welcome to the channel. Been a busy week. Stock market showing some pretty awesome resiliency. I've been pretty satisfied. It was a busy week for me. One of the largest holdings in the portfolio actually reported earnings. It was interesting. I will try to fit in what is going to be a fairly busy weekend for me, the review of the Hyliion earnings call from this week. If you haven't caught that, all you've got to do is subscribe to it through hyliion.com, go to the investor tab, sign up for that, catch it. It's fantastic. It was an interesting call. I think there was some shakeup. I've been calling for this for a while. I think it's been pretty cool that Thomas and John. I think John kind of stole the show. I think he's a wonderful CFO. I really like Sherry too. I think they've really had some really good CFOs through the history of the company here over the last couple of years, and I really like John. Super down to earth guy. He's got wonderful command of the numbers. And I would sense that some of the recommendations going forward are in no short order coming from the desk of the CFO. And I thought John really shined for me. But I will be getting in depth in what I thought was an interesting call, one that I would consider. It was interesting. I still feel like the company is in that prove it kind of phase here. And that was indicative by what has been horrible financial markets. I mean, horrible. The title of this video is Retail Investors Get a Bad Rap, and that is the truth. The institutions would have you believe, and most of the main media out there would have you believe, that retail investors belong in a corral with a stereotype that they invest one specific way. Okay. I'm actually here to fight that. I really am. Hyliion means a lot more than just investing in a stock and seeing it do well. I think there are things going on with Hyliion. I think that the competition in the space actually sometimes gets a little bit more credit. I think Hyliion is all too often forgotten in the space. And yes, it was encouraging to me, Rick, to see that acknowledgement in the first paragraph of the actual earnings call transcript, which I've read now a couple of times. And of course, that stuck out to me. You know as well as I've been calling for that. To ignore it, I think, was probably not in the company's best interest. And for whatever reason, they thought that this was the time that they wanted to go ahead and start acknowledging, not only the share price, but driving shareholder value, and not only acknowledging it, but making moves to that end. Okay. I think restructuring the original deals is an absolutely fabulous idea. And this isn't just my opinion. It was really explained the best by John when he talked about softening out that margin compression that's going to be experienced on the onset with the initial orders. So I think it's going to be super important for Hyliion to get this right. I think it's going to be a tough rollout. I think they've got a lot to do, and I think they're set up to do just that. I really do. I think hopefully this restructuring and passing along the cost of higher goods, which Thomas softened up a little bit and said that it was a norm in the industry, and I concur. It is. That Hyliion cannot be expected to strike a deal with these companies who are in need of these solutions, nor overprice the unit to where there's no incentive to buy said unit, right? They've got to get this right on the price point. The initial units, they won't make money. However, it's not about doing that. It's about getting the maximum exposure out there to the fleets to make sure that each of the respective fleets have their opportunity. But love to welcome everybody back to the channel. It's been a hell of a busy week for me. Hope everybody is just doing absolutely fantastic. The title of this video, I want to jump into it right away and just kind of declare for you guys that are not of understanding that we are currently at war as the middle class specifically. Okay, we'll take it back one step from retail investors. I don't even know what retail investors mean. When I hear that, I cringe. I'm an independent investor. I invest like me. Nobody is expected to invest like me. I don't look at people and deem them a recipient of my message insofar that they carbon copy my program and initiate it. That's not what this is about. So I'm a little confused as to why CNBC typically on a day-to-day basis will put pop shots out there to the retail community, insinuating that those groups of investors actually all invest exactly the same way. I'm here to tell you that your individual exposure to the stock market is one-on-one. It's one-on-one, okay? You will be led astray when you allow your God-given right to your ratio of one-on-one, when you allow your ratio to be influenced by others, and you end up trying to apply opinions that are not of your own, rather an interpretation of others, whether it be one opinion or five opinions or 10 or so on. Now, that doesn't mean you can't learn, okay? But to be influenced and apply based on those influences is really the fallacy here. And I think a lot of people truly do give away the farm. And I think they are at mercy to institutions that are built to take advantage of that very vulnerability. I really do. There was a big celebration amongst the retail community when they stuck it to the hedge funds during the AMC short squeeze debacle. Might I remind you, my friends, that the hedge funds since then have declared war on the real estate industry and they are buying up the entire country. Pretty sad. If there is a rock face or a beautiful lake or a piece of scenery in this country, those properties right now are being accumulated on the largest land takeover that I have ever seen in my 45 years on this earth. I've looked at property my entire life. It's a hobby of mine. I enjoy it. I enjoy looking at the prospects of raw real estate in and of itself. And I have never seen in my life so much raw real estate out there right now for sale, bare land that carry with it an HOA fee. What that tells me is that these folks are looking to not only invest in the land and be the landowners and the note holders, but also to pull residual dividends, yes, for a lack of better terms, HOA fees off of these said properties. And if you don't think that I'm right, my friends, look at any of the major realtor.com. I look at Land Farms and Lands of America. It's a good website. It's fun to look at. I've shared that with my Facebook group. Very, very disappointing. Very disappointing. And I have no other choice but to declare to a subscriber group that respects me, respects my opinion, respects the fact that I hold you to that same standard of yourself, to respect yourself enough to understand that the sense of urgency is now. It is right now. Okay. I've got colleagues that are missing out on homes that are being bid up for full price. I believe that the wage on real estate not only is with bare land, but also in suburbia, in those single family home offerings where I believe that that property also is being gobbled up at the hands of the real estate agents. So while we are stuck on a few interesting agendas right now, watching this political tug of war between the Democrats and the Republicans, wondering whether or not they are going to raise the debt ceiling. And my friends, I'll just give you the answer tonight. They are going to raise the debt ceiling. We should probably focus on other things, because while the rogues and masses of absolute sheep are following this false news out there, and wondering if that's going to affect my portfolio by 5%, or whether or not we're going to have a soft landing or a hard landing in this recession, whether or not we're going to even enter into a recession. It's inevitable, right? I think we need to look below the surface and look what is actually going on in this country. And it is pretty alarming. It drives a sense of awareness required of the people who follow the message and heed my call to really take that personal responsibility, because those individuals out there, certainly, if we have a bunch of individual applicators out there in understanding this very thing, we can be much more powerful, because the hedge funds are stronger together as well. These private groups that are going around and they're buying up all the real estate, they've got hundreds and hundreds of millions of dollars, I presume, to work with. They have a blank check to work with. Regular people don't have that. And for the people who are competing for $500, $600, $750,000 homes that aren't worth that, you really are subject to setting yourself up for a real tough road going forward, because where individuals cannot go hawk on a real estate note by $250,000, the hedge funds will wait it out. They don't care. And that's the game that I want to differentiate between real estate and the stock market when it comes to your own individual portfolios. You need to be investing long term with the idea of buying good quality assets and holding those for the long term. And it will be only through that route that regular people are going to be able to accumulate some wealth for themselves, and collectively as a group and as a middle class actually embolden our opportunity and not be stuck on the lower end of what I consider to be the great divide between the haves and the have-nots right now in this very country. Conspiracy theorist? Sure, call me what you will. That's no problem. But I operate on a ferocity to ensure that I have the best chance of being on the upper end of that conversation rather than the lower end. Okay. So you need to ask yourself whether or not you're taking those appropriate steps to make sure that your financial future is secure, making sure that you're staying hungry on financial markets that would just have you sell out of the market and, I don't know, wait for a better time in financial markets. Guys, the faux pas is that retail investors are these group of investors that only invest one specific way. All right. I'm here to kind of break down that barrier tonight. I appreciate you making your way to the live stream, guys. Thank you so much. I appreciate it. Get a beverage, get a cocktail, get whatever you need, man. We will be back with you in just a moment. Retail investors are typically tied up in the short term. We really need to change that. We need to not buy into this idea of always focusing on the short term. And I want you guys to thank for a lot of people who have frequented the channel. Maybe you've been with me a year, couple years, whatever. If you've been with me since the beginning, you've been really able to get a good sample set of a good 5-year block. And the stock market is measured in 5-year blocks, okay? No less. It's measured in 5-year blocks. So if I look at the stock market and look at the portfolio in the short term, I can be disappointed. I can be like, yeah, I'm the greatest investor ever. I'm up 20%, whatever it is. I'm up a little bit week over week. I'm up about $6,000 from last week. I reported out. I can get all up in arms about that stuff, and so can you. That is the fallacy in investing. We are making bets right now on Johnson and Johnson to be worth far greater in 5 years, not next week, not next month. Okay. Now, at the very minimum, if we get zero capital appreciation on a position at Johnson and Johnson just today, right? Um, then we will have rendered dividends over the next 5 years, and we will chalk that up as an unsuccessful investment because it failed to track the performance of the market. Okay, the S&P 500. Now I own the S&P 500 anyway. Okay, when we talk about diversifying our forms of money, it speaks to the psychology of money and people understanding that defining your different forms of money is absolutely critical. Okay, where I talked about the hedge funds defining their portfolio and really aggressively going after that real estate piece, a real wealth maker for the middle class families out there that buy one home and they keep it the rest of their life, and they may buy it for, $125,000, and down the line it may be worth $325,000, and they've got it paid off. It's a wonderful wealth generating source. Now the hedge funds have just taken that model and duplicated it in this aggressive takeover that I speak of. All right. I want to get to some of my comments here, guys. I got Cherie in the house, man. Good evening to you. Fantastic. Hope all is well. Everclear boy, yes, was an enlightening spot. He often has good info along with a few laughs. Hope you guys are talking about probably another channel anyway, I'm sure. Rebecca's in the house, man. Watch that one. It was great. You guys are talking about some cool stuff. You got another offering, I guess, going on. That's cool. Plenty of good reasons why I'm planning on immigrating. I saw that video title come up. I didn't catch it today, but that's very cool. Living with my European spouse. Sometimes I've wondered if Ryan has considered the same. Not only considered the same, that's what I'm doing. That is absolutely what we will be doing. We've decided that a while ago. My spouse is European, so yeah, and we're vacationing there in just about a month. So I'm slightly disappointed. I wish there was more options. I look on the landscape here in the U.S., and although I'd like to have a domicile here for the future, and we are staring down those milestones. It's not like I can just sit back and pick and choose and say, "Hey, I want to own property in North Carolina or, Tennessee or Oregon or Utah or wherever." I'm not in that position. I'm going to have to be strategic about my choices, and I am still wrapped up in my career right now. But the option to retire abroad is absolutely a foregone conclusion, and God willing, that it will be happening. I do vacation over there. This next one is for 25 days. I want to go and indefinitely stay until I'm ready to come back, whether or not that's in 6 months or 2.5 years. I will be going abroad, and I will be staying for an extended time period. Yeah, but that just gives you some insights, and we've got about 60, I guess, 60 years old earmarked for a nice target there, but there's just so much to see, and you can't appreciate how different it is. There's really very little similarity, if any. The people, the attitude, the culture, it's significantly different. And I think people really need to kind of maybe wake up a little bit. I'm subject to and a victim of the mass media here, which is always pumping through. And I don't watch a lot of it. I know a lot of people do, and it's really sad to understand that those influences really do drive a lot of the decisions and even understandings about the world, as misguided as those are, because you're not seeing them firsthand. I think it's very, very important that people do travel. And if I was able to earn some financial security, then that would be an absolute it would be an absolute option for me right now, even sooner than later. I'm very much looking forward to that. And thank you for sharing that. That really helps kind of draw a holistic opportunity, and maybe, I don't know, set up a little dream for yourself. I mean, I think a lot of people have a hard time resonating with the idea of investing because they don't understand and can't really feel, they can't articulate the value of it. It's a means to an end, my friend. It's a means to an end. That's what it is. I heard a spot on CNBC, and it was discussing the Robinhood earnings. It's a company that I despise. I've despised it since the beginning. I know some of you probably use Robinhood. I have an account myself. I can't wait to get it closed. I used it. I started it, used it with the intent of reviewing Robinhood. I think they suck. I think they're cartoonish. Now, when I said this a couple years ago, when Robinhood was all the hype, you know how much crap I took through YouTube on flushing Robinhood down the toilet, encouraging you to do the same? Hmm. How'd that turn out for you? Yeah, yeah, yeah. But Ryan, they're really easy to use. Ryan, they've got all kinds of colors. I don't need colors for my money. I just need efficiency and I need trustworthiness. And right now, the financial institutions as a whole are suffering from a lack of trust. Yep. Yep. It's crept a touch into the systemic category, which I'm a little more concerned about after the SVB debacle, Silicon Valley Bank, when that went under. They were taking on way too much risk, and I thought, well, it sounds pretty isolated, but the true measure of a bank's success is the very deposit holders feeling that they have a trusted relationship with their institution. And once that gets damaged, which I think we're in that phase where that trust is somewhat damaged, and that people are, looking at it, and it's like, okay, they misallocate the truth facts about their own institutions, and they say, well, all of them must be doing the same thing, and that is just not true. All right, your financial institutions are fine. From my perspective, I believe that it's setting up for a phenomenal buying opportunity. Phenomenal. JP Morgan, I've owned through this thing. It's performed quite well. I have not owned Bank of America through this. I think Bank of America is a buy here at 26. There's no doubt in my mind it's a wonderful entry into what I would consider the third best bank. I think Charles Schwab is a buy here, sub 50. I just have a hard time believing that a Charles Schwab at $85 was a good buy then, is not a good buy here at 47. So Charles Schwab, I think the outlier play in the regionals is Fifth Third. Fifth Third is very, very good entry. And then finally USB. I think USB is actually a good buy here too. So there's probably some interesting moves that you can make. BlackRock has held up quite well. BlackRock's a little bit different in the asset management category, and then the alternative investment category would be Blackstone, which I own both of those as well. So there's some buys there to be had. I'm really just monitoring portfolios right now. No additional shares purchased this week outside of Aduro Clean Technologies. I added 2,500 more shares today. I've been patiently waiting. I will disclose those on the next video that I throw down on. That actually brings the total share count of Aduro here. It's been in kind of a really tight trading range, and I honestly think that expiration for unit holders, the share and the half warrant that was issued 2 years ago, I believe, with the drop dead date of May 17th of 2023. I believe once that passes, I think we're going to have a little bit of shakeup in the stock and get back to normal. And I think Aduro is probably going to find its footing there once those warrants are done being called and collected up till the deadline of what we got a couple more days anyway. Yeah, 5 more days of that. So I think I wanted to grab some shares before that deadline comes and passes. But that was the one bigger offering. I did increase my position today of Amazon. Amazon went up to 45 shares. I own Amazon in multiple places, so I actually think that that puts me at 125, if my math is correct. Total shares in Amazon. I think Amazon is an absolute steal here. And I put Google in that top tier category as well. Google is taking a little bit of tailwind from the AI push, and Google will end up actually being in a really, really good position. Google also is a strong buy here. I ended up picking up 50 shares of Google today as well. What else did I do? Some interesting stuff, really just monitoring. I don't think we are out of the woods by any means. And I don't mean to scoff at the fact that I think we're not going to have a recession. If I was going to put my thumb on the pulse, I would suggest that we probably are. Okay. And I think it's been a couple of years removed from and delayed from the pandemic swoon that we had just 3 years ago. I still think we are feeling the after effects of that. And as an investor, you have to be able to weather those storms. It's just that simple. I think that to try to maneuver around these systemic risks in the market, which there will always be something. Okay, the news media will always gin up something. You might say, well, Ryan, how do we circumvent all those, all those landmines out there in investing? If it just seems like an impossible road to hoe, if you're saying that there's always shortcomings and always reasons as to why you don't invest, and always reasons to why we're on the, on the verge of global pandemic or global conflict or conflicts with other nations, et cetera, et cetera. The fundamental systemic truth in investing is this: look at the history of how the market has performed during everything that the market has been thrown at. Okay, through global conflict, through um, climate crisis, through everything that you could possibly look at, innovation still happens. We still have Microsoft 30 years after the fact. We're turning out companies now. I think Google's probably sneaking up on 15 years old, if I'm not mistaken, right? We're still turning out those companies that are generating fabulous returns for shareholders, and they will continue to do that over the long term. If you go back through the history of Johnson and Johnson, one of my favorites, the history of Johnson and Johnson roots all the way back to the 1800s, not the 1900s. They were able to survive and pay dividends over the course of, I believe Johnson and Johnson has paid over 60 years. And there's a lot of companies that they get into that dividend king category, and it begs the question, are dividends right for me? Okay. For me, it's an aspect and an element of my fundamental approach to investing. Well, does that mean I have to buy Coca-Cola Classic? Coca-Cola is a fabulous company, but you're missing my point. If you really want the true learnings of the structural wealth building piece, then it's to look at dividend growth investing in a box and ask yourself if you want to dabble in that discipline. Okay. I think most people could. I think most people should. I think most people could probably entertain the idea of adding some dividends to their life, as opposed to what I challenge a lot of retail investors to acknowledge, is that they don't understand or don't engage in investing at all. Okay. So the idea here is to understand the systemic applications here, and not necessarily the granular names that make up each of these holdings within a particular portfolio. That's why I share the M1 Finance portfolio as often as I do, because it's a wonderful way for people to grab exposure. There's 98 holdings. I added Realty Income to the real estate section of the dividend growth portfolio today. I was bored. I was home. I was recovering from a very busy week, but I threw O in there. There was one of my REITs that actually got acquired by another company, so that was interesting. So I took her out, and I added Realty Income in there. I don't think there was really anything else that was added to the portfolio there. I wanted to add Valero into energy, but I didn't get around to it. I had some interesting portfolio moves, very, very tight, very, very specific and isolated to really setting myself up for reemerging from what I have deemed some very tough markets to navigate over the last couple of years. It's been tough for me. Maybe some people are like, ah, no, this is all good. It's a piece of cake. I've got this licked. I'm awesome, and you suck. I don't know. If that's true, I congratulate you. It's awesome. It's been tough for me. If it's easy, I'll tell you it's been easy. It hasn't been easy. It's been tough, and I think the sentiment of the group is probably a little more closer with my analysis on financial markets right now, as opposed to it's all roses and again, you suck and I know I'm awesome. I came to see Paul. Well, if Paul is lurking, I will throw an invitation right there for Paul. There it is. It's right below your post, my friend. Hell, you can use it. You can come in here and impersonate him. I don't know. I hope all is well with the guy. I haven't seen him on social media. I did not invite him. Everybody's invited. Like I don't. You guys treat me way too formally. All right. Um, like I said at the top of the live stream, I don't profess to be a YouTuber. I'm 45 years old. Okay, this is a young man's game. All right, this is a young man's game to come onto YouTube and woo 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 and screw around and have confetti coming out your ears and acting like a complete dipshit. That's fine. That's what people really want to hear. People don't want to hear how to get rich. No, they want you to tell them what they need to do to get rich without any effort. That's what they want. All right. You follow my program, you'll get rich. All right. You will have the best chance of seeking out um, your financial exposure to the stock market and build wealth smartly over time. It's that simple. Wow, Ryan, you're full of it. You push highly on. I had a comment on my highly on video. Still pushing your bags? Sure, man. Sure, man. It's it is a 7.25% of my portfolio. The rest of the portfolio is chugging right along. The speculative growth is crushed right now in my portfolio, just like every other portfolio out there that held speculative growth. Now, your only way of protecting yourself against that is to not own speculative growth. That would have been prudent. I would contend that most people don't need to own speculative growth. They don't. If most people could just focus on a nice dividend reinvestment plan of their dividend portfolio and a nice exposure piece to the S&P 500, you'd crush. It's that simple. You'd get bored and then you'd come in here and you'd be like, Ryan, I'm an investor, I'm making money. And I'll be like, see, it's not that hard. Do you want me to stick confetti in my ear and blow it out my nose? I don't know what else to say. There's nothing, making money's badass. Like it's just people think it's so hard and elusive. And it's like, no, it's not. It's just do what I say and actually don't do what I say because I'm not supposed to tell you what to do. You've got to um, yield to the whims of the financial institutions so that they can take their cut, right? I don't want shit from you. I don't care. Hell, unsubscribe from my channel. You'll show me, right? That's what makes me different. That's what's really cool. And I won't yield. No way. Why are you pushing speculative stocks? What are you talking about? The CEOs call me and they want to advertise on the channel. They pay me for it. Why don't you try being happy for somebody? Okay. The very fact that I can come on the live stream and not make a dime and be happy to do it and provide an actual perspective on investing that actually works, okay, that does not apply to the masses. It doesn't. Again, confetti's not going to be shooting out my nose, okay? It's not going to. That I can promise you. It does not appeal to the masses. Most people are definitely afraid of themselves. I'm afraid of losses. you know, I can't do this. you know, Rebecca's welcome to join the live stream at any time. It's just like you are. Come on, fellas. If you're not busy, join the live stream, man. It's all good. I've got like a couple of words written down for my script tonight. I'll always think of something to talk about, man. Trust me. This is my absolute favorite topic. Shout out to Ryan, not me, but Ryan, my colleague. It changed his life this week. If he's watching the live stream, shout out. So 37-year-old, I don't want to share too much, but I will share this. 37-year-old who was sold an annuity that pays 1%. On an annualized basis, it's 1.92%. And he didn't understand. It sounded like a great idea. I told him that to be sold that product, the financial planner probably made a killing off of him. He was pissed, rightfully so. He called to cancel the financial. I was on the phone. It was on speaker. I listened to it on a long drive back from an obligation. And I listened to it, and the financial planner was like, well, what are you going to do with the money? You can't just go to cash, and you're going to be making zero interest off of your cash, and you're making 1.92% off of the annuity. And it's like, wow, what a condescending fucker. you know and yeah, it irritated him. That type of thing, man, it happens over and over and over again. And it just makes me cringe, man. I say all the time on the Independent Investor channel, we are fighting a battle that we will inevitably lose. We will. I will lose this battle, not from me. Look, if you watch my channel and you see why I do what I do, you will understand that there is a sense of urgency for you, not me. I'm fine. I'm freaking fine. I think about this stuff just like this guy thinks about them stuff. And I think there's probably hundreds and thousands of people out there that also put some level of rigor over their own program because they understand the urgency that I speak about. However, I do believe that there's hundreds of thousands, if not millions, of other people out there that will fail to understand the value of cutting back on their spending habits, to find a stream of income that is not only reliable, but at least at average. Okay, I can take an at average income and turn you into something very, very special. Am I going to promise to make you a millionaire? Well, I don't know. That's conducive to financial markets and the activity rendered over your investing time horizon, right? Okay. But better to do than not to do. Yes, agreed. I don't know. No, Ryan, I was investing. I mean, you suck, and investing sucks, and it's a big gamble. Fine, fine, don't do it. Piss off. I invest. I kick ass at it. There's a lot of people who kick ass at it. Um, it is very, very apparent to me that people do not have the insight to investing that they need to make an educated decision. So there is some level of trust that does exist in how lucrative investing can be if done right. Right? It's very, very important for people to seek out that validation for themselves so they understand how powerful investing can be. As you evolve with investing, your confidence in your investing and your validation becomes stronger over time. Okay. I always suggest that as a new investor, you have the least amount of validation over your program, the least amount of vindication, whatever the hell that means. Vindication means I'm going to tackle this investing thing because I watched Ryan and he's awesome, and I'm going to tackle it on Monday, and I'm going to get involved in this stock, and I'm going to invest $100, and it's going to go up $20. I'm going to go up 20% in one day. And lo and behold, you invest in the stock and it does go up. It does go up and you make $3. Okay. Another scenario is you get involved with the same $100. All right. And you lose $3 and you're like, oh my God, I got to panic my way out of the market. This is horrible. Right. Wishy washy, back and forth. Okay, playing into the whims of not understanding that you got to get the mind right before you actually engage in this, understanding risk really is what it comes down to. Fortifying the portfolio at a steady stream every single month. I tell you guys this stuff every single week because it needs to be more commonplace. Okay, that constant infusion via dollar cost averaging into the portfolio. Do what you can do when you can do. There's a few cliches in this that really do need to be adhered to. They're super important, and anybody can hear them and understand what I'm talking about. Justin, nice to see you, brother. Great to see you. Pocket Proper 19 in the house, man. Very cool stuff. What do we got here? We got Eric in the house, man. Shout out to you, brother. He's giving Matt Money a thumbs up. Matt must have said something really smart. Every time I see you at work, life is not about work. Matt's preaching. It's not about work. He's a working man. And that's coming from me, believe it or not. I don't believe it. Very cool stuff, man. And Valero trades at a P of 4.9 based on 2023 estimates. Pays a 3.7. Yeah, it would be number one actually on my list. I like Valero. I like BP. Of course, I like the big three. I like Shell and Exxon and Chevron, Exxon, and Shell. Jesus Christ, it's been a long week. Um, but yeah, I currently don't own them. I like ConocoPhillips. hmm Yeah. I like LNG. I wish the rest of the world liked LNG, but nobody likes LNG right now. Everybody likes hydrogen. It's expensive and unrealistic at this point. But what the hell? It's politically not the fuel of choice. Hyliion got a little run on their stock. I'm not really sure what the buying frenzy is all about. Gave back a little bit today. That was of interest to me. I kind of thought the stock was going to go the other way. It didn't. It went the opposite way of what everybody thought. But that was interesting. Let's get back to retail investors again here, guys. I really want to finish the live stream and kind of get to my point of what I feel like in the retail community we need to fend off. We need to define our own approach to this thing, but invest the same in and out of the markets. Okay, or out of the markets. We get deemed just traders, not investors. We are hypersensitive or fearful. Ask yourself, are you some of these things? Scared to lose. I talked about that a little bit. Don't understand the value of investing. Okay, I touched on this a second. It's very important that you validate what it means to you. If it's not going to mean something, for me, it means financial security. That's why I invest. That's why I buy J&J. That's why I buy. Oh, I bought a position today in BND, the total bonds market. It fit nicely in my corporate account, my investment account. So I did buy BND, along with some other kind of really interesting, just strategic buys. I did chop a couple of companies that I owned in duplicate. I did sell Costco today, which wasn't to sell, but in that account, it worked well to raise a little bit of capital. Kimberly Clark, I own both of these in the dividend portfolio. I chopped both of those to provide me the funding that I needed to go ahead and enter into the Google and the Amazon positions, respectively. Okay. But understanding the value of why you do what you do is super important. I think retail investors sometimes get blamed for seeking out value in a lot of superficial areas in their life. Buying cars, okay, overpaying for their home, their domicile. hmm I'm not here to judge. I'm just saying this is what I think is happening. Um, Finding value in things, overspending on trinkets, which is the most futile activity you can engage in, especially in the United States. Um, I just cannot believe that people can just spend all the time and not feel somewhat guilty about it. See, I engage so much on the stock market side that I actually feel guilty when I start to spend a little bit too much in the luxury category. Right now, I'm cared for. I could not spend another dime the rest of my life, buy food, fuel, gas, and hell insurance, and I'd be fine. Pretty bold statement, huh? I'd be fine. Trust me. Mhm. All the stuff that I could end up coming into ownership over, it's all a bonus. And it has been that way for the last 10 years. I've been super happy. I'm totally fine. I'm cared for. I'm happy. The decisions that I've made in my life have set me up to put me in a position to enjoy this latter part, earmark the potential to walk away from my career when I want. And it's good times. It really is. And that's why, for the few moments that I come onto YouTube and provide this product, it really works. It really works. It really does. None of this is manufactured. It's all very, very natural, and I enjoy doing the product. I really do. Got Vipers in the house. Jamie, good evening to you, man. Very, very good to see you. Very good stuff. Let's get up to the top here, guys. We got about 15 minutes in the show here. I'll roll through here and give some accolades, man. I got Michael's in the house. Good evening to you, man. Great to see you, brother. Music recommender. Good evening. Not an investor anymore. Great hobby. Ryan, he actually thanked me for the 2 hour Hyliion. That was really cool. I cannot throw down, but I was going to plan on doing a 10 a.m. tomorrow for our European subscribers, but moreover the Hyliion followers of the channel. We're going to do that on Saturday, but I can't do it tomorrow. I've got a prior commitment, and I've got some other projects that I got to take care of. We got Victor in the house. Very cool stuff. Got Rick's in the house, attending to shareholder value is front and center. Yeah, I talked about that a little bit. That was pretty cool. I'll be touching on this when I do my devoted Hyliion earnings call recap for Q1. My initial read on it, I posted in the Discord group that I was neutral to somewhat negative over the first read over it. And people were like, "What? How do you do that? Why do you negative? I'm not negative. I'm a bull on the company. Look at my share position. Um, I would go off of what I do, not necessarily what I say, to understand where my loyalty lies. Okay. All right. Appreciate you, man. Great to see you. Got Jared's in the house. Says good evening with his largemouth bass or his crappie. I don't know what it is. Maybe it's a crappie. I have no idea. It's a largemouth bass. Very cool. Everclear boys in the house. Got Matt's in the house. Good evening to you guys. Got Billy Joe in the house. Very cool. And I already gave a shout out to Rebecca. Very cool. Andy Smith's in the house. For all I do, this project has already paid for itself, Andy. It's very, very important that we continue to share my evolution in my life. That way you guys can understand the reality of where I started, where I am now, and where I'm going. Now, the where I'm going piece is super important for you to understand that you can do it too. Like, I aspire to things. I really do. I don't spend a lot of time thinking about the past. I spend a lot of time thinking about the present and the future. You call me what you will. You can diagnose me with a psychological craziness, or maybe it's the most sane thing in this universe to actually make dreams a reality. hmm hmm Yeah, but as far as the product on the Independent Investor channel, man, this is wonderful. This is a niche of what I really enjoy doing. I really enjoy talking to people about financial literacy. I believe I do it in a way that kind of helps people understand from just a simpleton's perspective how to seek out your exposure to the markets, and you do so as an independent investor. And for a lot of people, if I said, look, if I was going to just turn you over to your own portfolio, A lot of people would be scared of that. The institutions would jump all over it and say, absolutely, that's just completely crazy. That's stupid to do. I beg to differ. I beg to differ. I think that the rewards are far greater by seeking out your passive exposure to financial markets than trusting the winds of the financial institutions that are looking to get theirs. They don't do this for out of the goodness of their heart. Okay. They do this for profit. Okay. And the only way to cut out that middleman to ensure that those profits are not being lost via fees, the only way to do it is to become an independent investor. It's wonderful. And I think there's enough people out there that enjoy the prospects of taking control of their own money. What does taking control of your own money mean to you? Sticking your head in the sand? Trusting a financial planner professional? Why? Why? It all sounds great, but when you look at the behind the scenes, when you look at the disclosures, when you look at the products that are being sold to people, the irony for me is that fiduciary is aimed at having an investor's best interest in mind when that fiduciary makes that recommendation. The irony in that is that on its very, very deepest level, an investor's best interest would be contained in most cases by owning the indexes and no more. And owning the indexes not from the perspective of having a managed mutual fund, rather having just the passive Vanguard's ETF VOO. That's it. Very low expense. You passively own the markets over time. Wonderful. You want to branch out into some of those managed mutual funds, by all means do it. Okay. No problem. But you can seek those out on your own. You don't need somebody to recommend them to you so that they can get a kickback for providing you that recommendation that, oh, by the way, is supposed to be in your best interest. See why this project is infinite? It's wonderful. Here's the funny thing. Few things are going to happen over the next 5 years on the Independent Investor channel. The channel is going to grow. Okay. If it doesn't grow, I'm completely fine with that. We could go from 27,700, 30,000 subscribers and go down to 0. I wouldn't lose sleep over it, guys. I could care less. I could really care less. What I want to do is, irrespective of the subscriber count on the channel, I want to continue to provide transparency on my growth and evolution. That's why I give those small portfolio updates. We're at 467, I believe, this week. Yeah, it was a pretty good week. The first 4 days of the week were pretty good. I want to try to provide those continual updates for you. Where we'll be in 5 years, I don't know. I don't know. Will we be at 467? I hope not. I hope we're not at 267. That would suck. My insistence that investing works is only made possible by the continued validation of the program that by remaining in financial markets, no matter what the markets have for you, no matter what they dole out to you, you must remain an investor. And that's a lot of the difference between retail and institutions. Institutions are investors. And it's easier to be an investor when you're investing other people's money for you and putting other people's money to risk. But when you're an independent investor, you're putting hard-earned dollars to risk, okay, with the idea that giving yourself the best chance in financial markets has everything to do with holding long-term and being an investor as opposed to a trader. Okay, trying to time the market in and out. Very, very important for you to understand that. Mitridate says Joe-flation. Could be. I don't know. I'd like to hear something cognizant come out of the man's mouth, to be honest with you. Put two sentences together to actually make a rational thought. That'd be all right. Something that doesn't require a teleprompter. That'd be all right too. I wish the man all the best. I really do. I think over the last 3 years, I think my quality of life is less. Do I think it has everything to do with him? Not in the least. But here's the thing. My judge of a president is really, really simple. Are you helping me or are you hindering me? Are you taking from me to give to others? Or are you emboldening my path to individuality, to personal empowerment, to taking care of my own? That's the measure of me. And I don't care if you're a Democrat or a Republican. That's the measure. Do you help my bottom line? Might seem selfish, right? Might seem selfish, but there's a lot of people out there that need help. Really? I lose sleep over providing myself with that very help. Why do I have to provide somebody help that doesn't want to help themselves? Yeah. And that might be awful scathing for a lot of people. I totally understand. And quite frankly, I could really care less. I just don't care. A lot of people call me polarizing. No kidding. Jesus. I'm just a realist. I am a realist. Why should I allow somebody to put their hands into my wallet? I don't put my hands in yours. Mm, mm. We're losing this. We'll lose in 10 years. 20 years, it'll be gone. There will be no more dream. All right. You honestly think that this city is going to be better off in 20 years than it is right now? Really? Wow. I've lived both in Detroit and New York City. And New Yorkers, as proud as they are, they're losing their city. And unless they're willing to do something radical to get it back, they will lose the city. It's absolutely a foregone conclusion. Four of the boroughs, not Manhattan. Manhattan will be owned by China, and the rest of the four boroughs will be owned by all of the people who have been brought in here to live on society. I can dig as deep as you'd like, man, for sure. We got a last couple minutes on the live stream. Might as well throw some scathing shit out there, ruffle some feathers. Might be kind of fun. Very cool. Hopefully we can meet, have a drink, and a cigar. Absolutely, 100%. I'm down. That will happen. On me for appreciation for all your sharing knowledge and insights. Come on, man. You know, um, it's not really sharing. I'm not the smartest investor. No way. Matt, who's in the group here, Rebecca's a really good investor. There's a lot of really good investors. I got Justin in the group, Proper 19, Rick Schnellman, this guy right here, he's brilliant. So these guys are way smarter than me. I have a passion for investing. I identified a long, long time ago that I could not achieve my financial goals without investing. Right? Yeah, yeah. So I've taken the necessary steps to educate myself self up enough to get involved in financial markets, feel confident in what I'm doing, which is part of the gig. The product that we put through on the independent investor channel is really just a validation of what's possible, right? Look, I get up to 1-2 million. I was talking about the channel growing. Hyliion just going to do one of two things. Hyliion goes out of business, ceases to exist, um, sift off into oblivion and never to be heard from again, right? Or it could materialize into something. Materializing into something, I mean, this thing goes to $10. I'm sitting on 175,000. That'll just be the beginning. We're talking about 50. We're talking about just a little less 850,000 on that position. $100, which I think the stock could go to with no problem if they get the proper OEM integration that they're after. 14, 15, 16 billion in market cap, right? So now we're talking about 1.75 million on one position. If that happens, stand by for rolls. The channel will blow up. I'll be the same fella. Come on, tell the same jokes, talk about the same fundamental strategies in investing, and really try to continue to adhere to that goal that I've always had of empowering one investor at a time. And this week we did that. We did that. And again, shout out to Ryan. I know his life was changed. I know he appreciated it, and it was really special to actually get through to him. Very cool stuff. A lot of fun to allow that to happen. I'll get to one last question here. I got Ryan. Here he is. Ryan, you buy Nikola yet? Not yet, man. I'm gonna let that share base get diluted to 1.6 billion first. I would buy the shares here, but they're struggling for money, brother. You know that as well as I do, or maybe you don't. I don't know. Maybe you're naive like the rest of the Nikola shareholders. I have no idea. You guys are a rare breed. You really are. I give you all the credit in the world for having belief. I really do. Perhaps maybe you could say the same about us because the entire space has been absolutely obliterated. My thought was I could own shares of Nikola would be number 3 on the list. I would own Hyzon before Nikola, and Hyliion for sure is far and away the best, leanest business model. The way that they can do what they suggested that they're going to do in cutting costs here in the short term before coming to mass scale and production. I think you're missing the ball by not paying attention to Hyliion. I think you had the wrong dream. That's what I think. You had the wrong dream. All right. With that, guys, we'll wrap it up. Really appreciate you guys. Enjoy the rest of your weekend, man. We'll be back with you next Friday on the Independent Investor Channel live stream. Fastest 60 minutes on YouTube.